And Rick Bennett is logging in right now, I think. But as we go forward, just want to let you know a couple of things. First of all, this is we're going to go about an hour tonight. And second of all, this is a discussion about this book, The Real Crash by Peter Schiff. Now, Peter Schiff is what they call a doomsday guy, right? It's always bad news with Peter Schiff. Now, this doesn't necessarily mean that me and Rick espouse the views that are in this book, but it does mean that we're going to try to paint the picture of how the book was written, and then we'll kind of discuss what we agree with, what we don't agree with, and then finally we'll end the call with what we think you can do to prepare not only for what Peter Schiff thinks is going to happen, but for what we may a little bit more realistically think may happen going forward. And then we'll have a little bit of Q&A. So again, I'm your host, Mark Yegge, along with Rick Bennett. I'm a hedge fund manager, and I've been involved in the stock market since I was about 12 years old. I currently spend my days when I want in front of the computer investing in stocks and options, and that's just one of those things that one of my favorite things to do, and that's what I would do if I didn't have to do anything, which I kind of don't. But anyway, I have a lot of fun doing it. It's a blast, and I love teaching other people how to do it. I have a website that teaches people how to do it, and I give stock recommendations, options recommendations, and I'm just kind of a business and an economy and economics junkie. That's kind of my thing. Rick, are you there? All right, so while we're waiting for Rick to jump on. He was just on a second ago, so we're having a little technical issue. But why don't we jump right in, go right into the GoBundance book review. But before we do, just want to let you know, this is not a political discussion, although you might hear some political opinions that come through this. But politics and economics kind of mirror each other sometimes.
Hello?
And so we're not trying to get anybody fired up about political views, but we do need to kind of talk about some of the things that are out there politically that are affecting the economy. So without further ado, let's go through it. Rick, are you there?
Yeah.
So everybody, this is Rick Bennett. Rick, why don't you tell us a little bit about yourself? And I've already done that for me. Go ahead.
Okay, yeah. No, this is Rick Bennett. I'm in Austin, Texas, and I am the managing partner of a wealth management firm here. And so we're a little different from what Mark does in that we take sort of a more slow view to things, so we don't move around a lot, but we kind of do a holistic management of wealth for our clients, which just isn't just financial but also other areas. So anyway, so I've read the book, obviously, along with Mark, and we can go through his thoughts. I'm an eternal optimist, so it's hard for me to kind of get to that level. I'll see what I can do, but at least we can not only look at the book in terms of what Peter thinks, but also look in the book, more importantly, to what you should be thinking and how you should be applying maybe some of these ideas together with other ideas to further yourself and protect yourself and move forward to your success.
So the cool thing, everybody, is we have a bastion of knowledge on the call with Rick Bennett. He manages a huge amount of money, but he does it for generational clients and estate planning clients, and he has his really great picture with his firm about the economy and how to position yourself in that particular space. So really happy to have you on here, Rick, and can't wait to go through this with you.
Yeah, so, thanks, Mark.
Yeah, let's just talk about what the book is about. So it's The Real Crash, and basically the book is saying that government is the problem. Now, if you're a member of GoBundance, you probably agree with this, but whether you agree with it or not, it's really the cornerstone of Peter Schiff's philosophy, and that's that there's too much government, it's too involved, and the Constitution itself wasn't created to give people everything. It's certainly for free, and it wasn't created that the government is what we're here for. We are here to have the government help us and not hinder us. And his cornerstone is that the government is inefficient. And so if you give the government $1 million and you give a private industry $1 million, now granted you have good people operating in both situations, the government is going to be less efficient. And one of the ways that he says in the book is you can tell by doing that, you can tell the government is inefficient because if you give them carte blanche to run the entire economy without any private industry, who's going to pay for it all? So obviously it can't work just being government. That being said, the constitutional founders created the Constitution basically to provide some kind of a framework under which we could all live, a nation of laws and laws to govern the nation. Just that Peter Schiff happens to think that those laws are way too heavy. This graphic that I've got up here, it just basically says, do you like how the stock market acts when taxes are up? So you can see that there's an inverse relationship. As taxes go up, the economy doesn't perform quite as well. And so what they're saying is that the more you give to government, the less efficient your economy is, and that's what's happened in Russia. It's happening now in Venezuela. It's happening around the world. So that's certainly a belief based on what he thinks there. Okay, so we keep making the same mistakes. Now, we've done this throughout history. There's never been a fiat currency, which is a money printing currency, that has never blown up. And we are in the middle of a fiat currency, according to Peter Schiff, and we just keep printing money. In fact, we've printed so much money, it's more money that has ever been printed in the last several years than has all been printed in the history of money printing in human history. So basically, we're making the same mistakes. And then when you look at the downturns, most recently the downturn of 2007 and 8, that downturn was government influence. So you saw the government stepping in, providing loans, and making banks give loans to people that didn't necessarily need it. Of course, Wall Street played a big role in that as well. But if it weren't for the government prodding, in his opinion, the private industry to do that, we wouldn't have had that big bubble in the housing market where it got out of control and then it finally went the other way. And then what happens is he basically postulates that government keeps bailing itself out. And so whenever government makes a mistake, at least in our government, and now you're starting to see it in Europe and you're starting to see it in China and Japan, the government will figure out a way to just print more money and obliterate the mistakes. And then when the government gets involved, that creates bubbles. And then you see those bubbles pricking all over the place, depending on whether it's housing or right now you're seeing an oil bubble, you're seeing all different kinds of bubbles. There's gold bubbles and all that kind of stuff as well. So this is all created by government inefficiency. And then when you bail out inefficiency, whether it's private or public, that's called too big to fail, and it only postpones what is eventually going to happen. So you might as well take your medicine in the short term rather than the long term. Then he goes into a discussion about jobs. Government doesn't really create jobs. Government, and you'll hear the politicians all pandering to the voters saying that we need to create more jobs. Well, the government doesn't create jobs. It creates the environment for job creation. And so if you look at the Reagan economic results, those were based on creating an environment for job creation, lowering taxes, trickle-down economics, and you can't argue with the fact that when you did all of that, it created that job creation environment. So more jobs are created then than fewer. And right now we have a little bit of the opposite going on. Even though the numbers say that we're creating more jobs, they're at the expense of some of the full-time jobs that we've lost. And then what we have is things like stimulus, which further proves that the government is inefficient. We bailed out and created companies and fostered companies like Enter1, Solyndra, the solar companies, and we had all these shovel-ready jobs, and we created $780 billion worth of government stimulus. And then when we did that, those companies and those jobs really never came into fruition like they were touted. And so if you extrapolate, I think I mentioned this already, the government could literally employ everyone, but then where will we get the money to pay for it? So he's also a big proponent of repealing the minimum wage, saying that the minimum wage creates a false floor, and it creates a disincentive for employers to hire, and it creates a disincentive for people to work as well, because there's an automatic floor in there. And then finally, a regulatory environment where there's too much regulation, where the government regulators are coming in, it's taking too much money to create a business or to keep a business going, or you have to hire a certain demographic of people, or you have to pay them too much. All that regulation leads to inefficiency. Then he talks a little bit about gold and the Fed. Now, gold is a hard asset and always has value. He's a big believer in gold. And even when gold has come down and has been almost cut in half in the last several years, he believes that gold isn't going away, and he's right, because it's a hard asset and people will always want gold, because there's a belief there that you can spend gold, and the dollar, since it's a fiat currency, means that it's only backed by the full faith and credit of the U.S. government. And when the U.S. government goes away, or people don't believe that dollar has got value anymore, you'll get more value in burning the dollar than you will by spending the dollar. So when the dollar collapses, other countries will lose faith. They won't want to buy our bonds, which will make interest rates go crazy, and people will flee to things that they can believe in, which is hard assets like gold and silver and some of those other, some of the commodities. He does talk about Bitcoin in this version of this book, because Bitcoin is a relatively new thing. He just doesn't believe Bitcoin's a hard asset. It's created with an algorithm on the internet, and you can't put your hands on it. So if computers go away, like he thinks they might, and we're left to fend for ourselves, then how are you going to spend a Bitcoin that's only in your computer? And then finally, our deficits and our debts are unsustainable. The more money we spend, the more money we owe, and when we owe it, we also owe the interest payments and the debt service on that, and that's unsustainable, causes more inefficiency, and eventually the house of cards comes falling down. It all collapses because we're totally bankrupt, and we're Venezuela, which is what's going on these days. Now there's a case to be made about demographics, and if you know some of the teachings of Harry Dent and his organization, he talks a lot about the baby boomers. And the baby boomers is this big egg moving through the snake of the economic life cycle. And that's the big generation. It's a generation that was born right after the World War II, and so it's our biggest generation, and that generation creates lots of wealth. And as it goes through the wealth cycles, as people are, in going to college, they don't spend as much money as they spend when they have young families, or when their kids are teenagers and they're 47 years old, that's when they spend the most. And from that point, they start to spend less and less and less until they're over 65 and retired, which is now where those baby boomers are in the economic life cycle. So they're spending less. So they've created all the major booms that we've had since the Depression, and now there's a vacuum. There's fewer people coming up in the generation behind them, and so that will create the slow growth. And that slow growth is, we think, it's deflationary, right? Because it's hard to inflate things when there aren't as many people spending. So when people are spending like they did in the 70s, you had incredible amounts of inflation. But when there's a lack of spending, now you have deflation, and you have the Fed coming in and trying to create that inflation. And you see it in Japan, you see it in China, and now you're starting to see it in Europe as well. So what Schiff talks about is how to invest for the real crash. So first of all, he says invest in the right countries. Now, these are the right countries according to him, but basically if you look at this list, it's a list of countries that are free in general. Hong Kong's not considered that free, but it's the freest of all the Chinese economies. And they are basically commodity-based. So Australia and Canada, for example, have a lot of economic base in their commodities. China has got this huge amount of people. Switzerland is the financial center. So he's got kind of a smattering there of what he thinks are the right countries, and he doesn't believe the U.S. is the right country. And so we take a different view, which we'll get into in just a second. And so what he says is that you should invest in a three-legged stool, okay? Quality foreign dividend stocks so you have income, cash and foreign bonds so you have liquidity, and finally the big belief that he has is that when everything goes and crashes, that everybody will flock to gold, so the mining companies and the gold companies will be the winners. So that's how you invest according to him. So Rick, what did you think? What do you think about some of those ways that we can practically take some of Schiff's ideas and put them into action, or do you have some other ideas you want to talk about?
Yeah, Mark. So I think what the foundational parts of what Peter is saying certainly are hard to argue with. I think that if you were to talk to David Osborne, who's a very successful entrepreneur, he would tell you cash flows sort of dictate. So the days of betting on the come, that's all fine, but really how much cash can you generate today or in the foreseeable future, and what kind of leverage above the debt that you may have on a property or on an investment to sort of have a buffer if things go down. And that's, I think, the most key part of what we're talking about. So whether it's high-yielding foreign dividend stocks. That's assuming that America is on the decline, and I'm sort of not one of the buys into that, because
Right.
America is always iterating, always adapting to change, always meeting challenges. It is the free society, but whether you believe it or not, the underlying premise of, look for value, look for, not something that you think may happen in the future, but what exists today and what can I enhance to enhance my cash flow off of it. And I think those are principles that have stood the test of time.
Absolutely. So what do you do? So the Schiff book, basically, and by the way, for those of you that haven't read the book, Peter Schiff is credited with calling the 2008 downturn, and Rick and I were talking before the call started, and he's been predicting it for a long time. So even a broken clock is right twice a day. Not necessarily saying he's wrong. I'm just saying that he got credit for 2008 when he was out there for a long time talking about how the housing bubble was going to burst. And there are other things that we can predict, and we may or may not be right, or he may or may not be right as well. But one of the things that I think the great thing about doing this book review is that it gives us all an opportunity to kind of stop and take inventory and say, okay, wait a minute. Some of this stuff makes sense, and maybe some of it doesn't. So what do you think about this doomsday scenario, Rick, where people are buying 50-pound bags of rice and lots of canned goods that they can survive in their basement? For example, if we have a nuclear bomb detonated above the U.S. and we lose all of our power and internet, what do you think about that?
Well, very interesting. So once again, my eternal optimism does not allow me to think of those things, and it's kind of called a blinder, but it's just the way I am. But I will say that I met a very interesting person that works in very high circles of security. And his advice was, why not prepare for an event that could happen? So his advice was to do things like stock up on perishables that would last a minimum of 2 weeks, preferably a month. Store what he calls permanent money. He didn't go for gold, because even in that scenario, gold's going to be hard to spend. He wanted a basket of international currencies, because you don't know who's going to be the winner. And he also, most importantly, I think the part that he came up with was, if an emergency happened, and everybody's from a different city, it's funny, Korea actually named Austin, Texas, one of their sites that they would hit. I don't know how they picked Austin of all places.
Wow.
Yeah, they had, New York, all the big ones, and Austin, Texas. So I think wherever you are, the one thing he pointed out was to educate your family, if you have kids or your spouse, whoever, that in the case of emergency, where would everybody meet? Let's say all communication was cut off. Let's say all transportation, you couldn't even drive really. Where would everybody meet up? And make sure everybody was aware of that in case of emergency, so you could show up in the same location. And, I have to admit, I haven't done it yet, but we're all, know what we should do. And I have to admit that I think that was a very, very heady thing and advice to follow. So why wouldn't you do those things? I mean, what would keep you from doing those things? In today's world, anything is possible, but not all things are probable. Right. So although I don't believe it's going to happen, I don't know. Who knows? So why not prepare? So I think those are good things to follow.
And by the way, we are, if you guys have any questions out there, then any of you attendees, please go ahead and shoot them in, and we'll try to answer them in the time that we have remaining. So, Rick, what do you think about the fact that history repeats itself, and we are going through, because Peter Schiff makes it a case in his book here that we are repeating the same history over and over again. So we just recently came out of the downturn, which he predicted, of course, and now he's predicting the next one. But he's saying we're doing the same things over and over again. We're pushing loans out to people. We're printing incredible amounts of money, just like we did under Greenspan. We've done the same thing under Bernanke and now Janet Yellen and the Fed. And so the more money that we print, the more bubbles we create, and we don't really know that they're a bubble until they burst. So in the light of that preamble, what do you think about historically how that's played out?
Well, I think you see some interesting things. So there's no doubt there's going to be bubbles created from what they're doing. And in fact, they kind of expect that that's going to be the case. Now, if you're on the right side of a bubble, that's a beautiful thing. It's like musical chairs. You just don't want to be stuck if the music stops, which brings me back to things like leverage. And I love leverage as long as if anything goes wrong, they don't come after me to pay it back. So protecting you personally, building a personal worth that's protected against downturns, playing the bubble because, frankly, here in Austin, Texas, I can't even count all the cranes in the sky right now. I mean, it's just crazy down here. So why not take part of it? Then again, I think that there's certain things that are happening in the world in monetary policy that are a disconnect. One is there's a very low what's called velocity of money going on right now. So they're pumping more money in, but it's not doing any good.
Right.
People are not multiplying it. They're not using it. They're not borrowing it. The banks really can't even lend it because they're still repairing their capital. So even all this money just isn't flowing into the economy. I guess at some point it could just come flooding in and bid prices up. We're not seeing inflation. We expected inflation before now. Actually, I had to take a double take on a couple of things I saw because the CPI actually went down for a couple of months. And those are very interesting things to monitor because what does that mean really? If we're not growing and we're pumping all this money in, what's really going on? So maybe it's a demographic shift. Maybe it's people are afraid to borrow. The government money is going on, but they're really just taking over the debt of the individuals, so it's going from private debt to public debt. I think I come back to my primary tenets. Create cash flow. If something doesn't cash flow, what can get it to cash flow? In the world of startups, which Austin's a startup town, all the savvy people that I work with, it's how fast can you get to break even? And if you can't get to break even, then you got to hope for the greater fool theory that somebody will buy you because you're a great deal, but you never made it to break even. So I think it's a time to watch for cash flow and be opportunistic in whatever area you're looking at. I guarantee you a lot of people are going to lose a lot of money in the oil business, but I'll guarantee you also a lot of people are going to make a lot of money too. So it's just going to go from one hand to another.
Well, let's talk about that because that's one of the questions that we just had come in, and that's about the oil market. And you're probably pretty qualified as anybody because you're right there in the crux of part of the oil boom going on. And there, would you think that you agree that there's a bubble in oil that just burst, or do you think it's just a cyclical downturn?
No, I think it's a very interesting situation. So I think oil is a global commodity. As much as maybe some people don't want to admit it, the world still runs on oil. I forget how many million barrels of oil we burn a day, but it's incredible. So on a global basis, oil is still important. But then when you override a few things that are going on, so America is known for its ingenuity and perseverance. And so as prices went up, the engineering to extract oil from more interesting places like down here, shale, the technology kept improving, and we figured out how to squeeze oil out of rock, basically, is what that is. And so America started becoming a major producer, in fact, the second largest producer in the country, in the world. It wasn't long ago we were going to be completely dependent on oil. In fact, the world was going to run out of oil. Now there's oil everywhere. But the real players in oil is still the Middle East and a few other countries. And really, Saudi Arabia still controls what goes on. And by just merely turning on and off a water spigot, literally, they can change the price of oil. And they're choosing to allow oil to keep going down. And you got to ask you, why would they do that?
Why do you think? Right.
Yeah, I believe they're doing it for two reasons. One, it's a squeeze play. So if you're a marginal producer with high costs, you're gonna go broke. And two, they have a very serious situation from an ideological standpoint with Iran. And Iran is very down right now, and I think they want to keep them down. In fact, I think they want to drive them all the way down. And so, you've got some very, very powerful forces out there controlling the price. But if I were a betting person, and in a way I sort of am, just like you are, Mark, I would bet that oil will be back above $80 a barrel in the foreseeable future. It has to, because you can't really produce it for less. So it's only a matter.
Yeah, and if you listen to T. Boone Pickett, he completely agrees with you. He thinks oil is going to go back up, and usually when he says something about oil, I listen.
Yeah, definitely. So I don't think it's a matter of if. It's only when and how long this squeeze play goes on. And Saudi Arabia can do this for a long time, but it's interesting because, studies down here, and I'm very involved in oil, studies down here, they did a report on what is the social, not only just the production cost, but the social cost break even to a barrel of oil. In Saudi Arabia's was $90 a barrel. And the reason for that is they don't have things like income taxes there. Everything is run off oil, their whole country. And so as prices go down below that, they can keep going for a long time because they have huge sovereign wealth funds. But over a period of time, they've got to get it back up to run their country. So it's only a matter of time. Then again, it could go on for a year. It could go on longer than that. So
well, one of the statistics I heard is that the fracking boom was created by, like you said, the high oil prices and engineers figuring out how to get that oil out of the ground. And some of the estimates I've heard is that the break-even point is $55 a barrel. And so anything below $55, and today it's what, 43, 44. It's put a lot of pressure on like you said, those marginal producers and really anybody in the fracking business. So it creates a ripple effect through our economy where people aren't going to be hiring that they were hiring like crazy in North Dakota and Pennsylvania and Texas, and now they're not going to be hiring as much. So you're going to see that effect on our economy. What do you think of that?
Yeah, I think absolutely, and I believe that. So I know a lot about fracking, and a lot of that's going on down here, and it's a great technology. These engineers are phenomenal in what they achieve, but the costs are high, and it costs more to produce those barrels. And also, in oil, there's a thing called a decline curve. Well, shale plays like that have a fast decline curve. So you drill it, and a bunch of oil comes out. But it's not like hitting a big pool of oil. It's an interesting process. So I think that they've got the way they keep that program going is they keep drilling. So they drill and drill and drill and drill. Well, these prices are going to stop drilling, and if that drilling stops, the decline curve will take over, and that production will dry up pretty quickly, relatively quickly. And so then that's where, if people are from different parts of the country, I would be very careful if I was in a part of a country that was building an infrastructure, jobs, homes, everything around that production, that oil production. Places like, Pennsylvania and the Bakken Shale up north. I'd be very careful, Midland area here, because that is gonna dry up, and those jobs are gonna leave. That's what is happening. I mean, it's squeezing those marginal players out.
And you don't think that's a short-term phenomenon? You think that might be a little bit longer term?
Yes, I think the Saudis are prepared to go for at least a year or longer, however long it takes. So they're very hunkered down in what they're doing, and really, the U.S. doesn't mind at all, because although the amount of jobs in the U.S. related to oil is a fraction compared to the huge, massive consumer input that having lower prices does. So everybody driving knows it costs less to fill up your car. Well, that's money that could be spent on something else. And so, really, the U.S. is one of the winning countries from these low oil prices. That doesn't mean everything is.
I have a question that came in. It says, talk about gold, the euro, and jobs. So let's start with gold, because that's what Peter Schiff talks about, and he believes that kind of everything is going to revolve around gold at some point. So what is your belief on gold? I can tell you what I see it doing short term, but what do you think? What do you think about gold overall? What do you think?
I think that gold is an insurance policy against monetary deflation, and so maybe there's a place in a portfolio, but the thing about gold, it doesn't pay interest, it doesn't pay you cash flow, so it's a commodity that is not highly used in industrial production. It is somewhat. So, I think it has a place in a person's portfolio. Maybe 5–10%. I think as you get above that, you're speculating, and unless you know what you're doing, once again, you could get caught.
So a lot of people made money in the gold run-up when it went up to 1950. Over the last 20 years, it's gone from 180 to 1950, and now it's back down to say 1275 today. But so a lot of people saw that last part of that acceleration, and they thought, well, I should be able to make money on gold. So that's why gold is first of all, one of our questions, and it's why it's such a big deal to Peter Schiff. He thinks that is really the spendable money in the future, because the dollar is going to be worth more as kindling for your fire than actually money that you can spend. What are your thoughts on that?
Well, I also think California is going to fall into the ocean one day. So
right.
I can't tell you when. I just think it'll happen someday. But I don't put too much into all that, to be honest with you, because the world economy is really, money is just an exchange between two people for services or goods. That's all it is.
Yep.
And so whether it's Bitcoin, whether it's American dollars, whatever it is, it's just what I give you to get what you have that I want. That's all it is. And so things become not what the value of it is, but what the relative value compared to something else is. And so I think it just ebbs and flows. There's no doubt that debts are piling up and are going to be hard to pay off. But where does that end up and where does that lead? I'm not. My crystal ball gets a little fuzzy out there, so I'm not sure. But I don't think it's going to happen. Anything's going to happen tomorrow. I think it's going to take a long time, and I do think that these kind of environments cause a lot of heavy turbulence. So you just talked about oil going from 180 to 1900 to 1200. Those are huge swings. So,
sure.
So I think you're going to see huge swings in things. We already have. We've seen it in the stock market. We've seen it. I don't know about the rest of the country, but if you were here in the 1980s, you could have bought just about all the real estate in Austin for not much money. So these things are going to ebb and flow, and they're going to come. We're seeing it in oil now. I know a lot of people in the oil business, and you just don't go from $100 a barrel to 40 without a lot of serious situation going on.
Right.
If you're not in the oil business, it's not affecting you other than it costs less to fill up your car. But if you're running an oil company that has some debt on it, you're scrambling.
So one of the things I think about gold, and I have almost an exact 180-degree opposite opinion on it, is that I think gold is a commodity. Now, it's a little bit different than another commodity because it's spendable in theory. When you have gold coins and you've got to buy bread, you can. We've never seen this in our lifetime, but you could take that gold coin and buy some bread with it. But we haven't seen that, so I can't really put a lot of credence in it. But I think gold, like all the other commodities, like copper and like platinum and silver, are they are exactly that. They're commodities, and commodities lose value in a deflationary economy. So I've believed for a long time that gold is deflationary. So when gold was up at 1900, I'm not saying I called the top, but I just didn't believe there was anything driving it except for some Indian weddings in the country of India. They'd give a lot of gold. The more gold you give for the wife, the more apparently class you have or something like that. So during the Indian season, gold goes up a little bit just organically. But by and large, gold is, like you said, it's not spendable, it doesn't create cash. And so when there's not a lot of fear in the markets, you start to see a decline in gold. Right now you're seeing an uptick in gold, and I think gold is forming kind of a long-term cup, but I think there's a little bit of a correction ahead. It may be on a short-term bounce, but I think overall gold has been a deflationary position, and that's why it's gone from 1950 to down to 1100 in just a few years. So let's shift to some real practical things that that our attendees can take away from this. And one of the questions that I have is, how can they benefit from real estate? Now, Peter Schiff doesn't really talk a lot about real estate. He does make an allusion to it about agricultural real estate, and if you follow any Jimmy Rogers, that's basically what Jimmy Rogers invests in, is agricultural real estate. And so, but more practically, the GoBundance folks are horizontal income mavens, right? We're looking for the best horizontal income that we can find, and a lot of people turn to real estate for that. So let's talk about the outlook for real estate. And I have a feeling you're going to say that real estate is local, but let's just talk generally. What do you think? What are your thoughts on real estate?
Well, I like real estate. I think that you got to look at supply and demand. I do think it is a area, regional thing you have to understand. So I think, once again, you have to look at supply and demand to figure out whether the pricing is right in your area. Austin, you get a lot of different opinions here, and it's kind of interesting because is Austin overvalued? Is it fairly valued? Is it undervalued? Is it going to keep
how do you know?
Yeah, that's a tough thing to predict. It really is. So you just got to watch the supply and demand closely. And right now, Austin is a hot market, and I'm sure there's other hot markets around the country. I heard San Francisco's come back with a vengeance, and so.
So when you say hot market, if I could just jump in, you're saying it's a hot market, but does that mean that it's overvalued with respect to cash flow? Because if we're talking about cash flow, then your yields are going to be down, your cash-on-cash returns are going to be down on your investment. So if they're hot, then aren't you paying too much? Or is that a good thing if you're a flipper, for example?
Well, if you're a flipper, it's always good, I would imagine, because you're getting in and getting to the next higher price. There's different types of real estate. So if you're in real estate, what we call institutional level, those cap rates are getting, or returns are getting driven down extremely low. So, it's hard to justify some of those situations. Now, if you're a guy that buys a single property, puts some good sweat equity or intelligent equity into it, fixes it up, gets it going, and rents it out for a higher rent or flips it. Now, I think there'll always be opportunity.
So that's where we can take advantage of some of the more practical things, because I don't know if a lot of us, I'm certainly not one of those people that wants to buy foreign dividend-paying stocks. It's not that accessible to me. It's a whole realm of things. It's hard enough for most people to understand what's going on in our own stock market, our own fixed income markets, let alone figuring out a fixed income market in a totally different country and how you buy it and all that stuff. Would you agree?
Yes, totally.
Yeah. So real estate is something that we can get our arms around, and then let's talk about maybe we'll finish up on this, and that is the power of American ingenuity. And I say that in the shadow of the stock market, because our stock market has, arguably some of the best companies in the entire world. Apple wasn't created in China; it was created in the U.S. Facebook was created in the U.S. We seem to figure out, even when we go through downturns, ways to be innovative and to create industries that the rest of the world only wishes they created. And that's where I believe that the stock market plays such a huge role in what we're doing. And yes, the stock market has been inflated hugely by the Fed printing money, and that has benefited the people that are in the stock market. And some of the politicians will say, oh, it's only benefited a few people, but those politicians are the ones that have printed the money. So let's talk about the power of American ingenuity and how we can profit or invest in it. What do you think, Rick?
Well, yeah, that's why whenever you start getting negative on the future of America, I have sort of a disconnect, because we're still the freest society in the world, and we still have the ability to iterate and come up with solutions. I mean, that's why this whole oil thing is happening, a part of it, because we figured out how to drill smarter and create oil where it didn't exist before. And so I think you've got other countries in the world that are, China being, sort of the juggernaut, but it's a ways away from really being to the level that we're at in terms of ingenuity, in terms of coming up with new ideas. But wherever they come from, even if America were to slow down in that regard, it's not going to stop, and it's not going to just go bankrupt from lack of working or lack of ingenuity. America's a very interesting place. And so I don't think you have to go. I think that obviously if you have the ability and you have the resources to research and resources and connections, yeah, I mean, we're a global society. But then again, there's plenty of opportunity right here. I mean, you don't have to go that far to create opportunity.
Agreed. Okay, so let's sum up. Here are some of the things that I think we discussed, and if there aren't any more questions, we'll just go here to summarize. First of all, you believe that we should be debt-free, or at least eliminate our debt so that it's manageable, and don't get personally in debt if you can help it. So don't be on the hook if we have a downturn. Don't be the one standing up when the music stops. Prepare. So you said one of the things that we should do is prepare for the worst, and hey, why not grab a few extra cans and put it in the cabinet, and why not tell our families where to meet when we have that opportunity in case something happens. Doesn't cost anything, right? Another one is to diversify. They keep calling that the only free lunch out there, is that asset allocation and diversification. Watch out for oil, because oil can be a longer-term bear market. Real estate, and when it comes to investing in real estate, just make sure you understand your market. Don't get sucked into the values that other people are putting on that market. And then finally, when you invest, there's plenty of great things and great people to invest in right here in the United States. And you don't need to go all over the world to try to find things to prepare for the real crash that may or may not ever come. Any other final thoughts, Rick?
No, I think that sums it up. I think, probably the people on this call are aggressive and finding ways to create opportunities for themselves, and I would say just pay attention to that. Forget all the rest of the stuff for now. Just pay attention to what you're doing and do it, better than the next person.
Well, thank you so much for your time and being on the call and helping me decipher what Peter Schiff is talking about and shed a little bit of light of what somebody that's in the trenches and dealing with huge amounts of money and people's wealth really thinks about the market. I really appreciate it and enjoyed it.
Definitely. Thanks, Mike. Enjoyed it with you, too.
And thank you, everybody, for sending in your questions. And what was that, Rick? Go ahead.
I said look forward to seeing everybody in Tahoe.
Yeah, I can't wait. Tahoe's going to be off the hook. Going to be a lot of fun, and we got some great speakers lined up there as well. We're going to be discussing a lot of real estate, I have a feeling, over that 5-day period. So hopefully doing a lot of skiing. So thanks, everybody, for being on the call, and have a great week.
All right. Bye, Mark.
Thanks, Rick. Take care.
You too. Bye-bye.